Hi traders, and welcome to the first edition of the Keyzone Traders Trade of the Week in 2022. Had a little bit of a break over the Christmas period. Last week was getting back into the markets and quite quiet, but we've been back full steam ahead this week with lots of opportunities, and there were a lot of trades that we could have chosen this week as a Trade of the Week. But this week we're going to talk about a trade which we took on the Dow Jones. Now, this is it's another day trading strategy. It's on the smaller time frames, and it's just going to show you how using the higher time frame context as well can give you some really powerful situations and really powerful trade opportunities. So let's go take a look. Hi traders, and welcome to the Keyzone Traders Trade of the Week. Now this is an example on the Dow Jones, and it's a trade that we took on Monday. As I say, there were lots of really good trades this week, but I wanted to show this one because it shows when you can you should always use your higher time frame chart to give you the context of the market as well. But when you can get some complements between the higher time frame and the lower time frame as well, your execution time frame, it can create some really powerful signals with some really tight stops as well. It doesn't always happen. You shouldn't only be looking for these signals because they can be few and far between. But when they do set up, they can be really, really good trades. So we had this support zone here on the Dow Jones. Now, as you can see, we had made a high. We actually then put in a reversal signal here. And then we sold off impulsively, and we've created this bit of a corrective structure here, but then created this zone of support at the bottom. Now this here in of itself is actually a reversal pattern. So what we had here this is just before the market opened on Monday. So when analysing the market on Monday, we saw that we had come from the highs, we had pushed down impulsively. We had also then, so we automatically know that really we want to look for shorts below this zone of support, and we actually had a sell signal in here as well. So there was a lot going on in the higher time frame context, which suggested that we should have a bearish bias going into the session on Monday. So then let's go and take a look at what actually happened in the session when it opened, so we can show you what we looked at and what we traded. Okay, so we're now on the 1 minute chart, and as you can see, the price here, so I've marked this purple line down here. This is the overnight low, so this is the lowest price that had been traded in the London session, and this red zone here was that support zone that we've just been looking at on the hourly chart. So now let's go forward a couple of candles and show you what we actually saw. So the price on the first candle moved down. We then had another really strong candle, which on the cash open at 2:30, we had a strong candle which broke that overnight low. It closed right on the bottom of this zone, and also the price actually broke that zone. So it's a really bearish candle. So we know that we're bearish on a higher time frame, and we're having an attempt to break down from that level. We move on another candle, and you can see price tried to push back, but it's closed back below that overnight low. This gives us a sell signal. This is a sell signal that we teach in more detail in our academy course. But this here was a sell signal. Now what we do from here is we can short the market on a break below that candle, and we have our stop above the high of the signal candle. Now you can do one of two things. You can, because we're breaking down on the hourly chart, we can extend our target, or because the Dow can be very choppy, you can just go for 1-to-1. It really is up to the trader and how you want to and your trade plan and everything like that. So, but as you can see from the market, from the price action, we then had a little bit of another breakdown, and we had a little bit of a rally, but we held below. Everything was still below this overnight low before eventually we went straight down and hit our target within a couple of minutes. So if I just jump back a couple of candles, at this point here in the trade, I was a little concerned that because of these towels on the bottom, the buyers had been stepping in. We tried to break down twice and the buyers had stepped in, and at this point it was like if the price broke above these candles, then we was probably going to get stopped out for a full loss. However, the only thing that kept me okay with the trade was, notice again, the close of the candles were both below that overnight low, and most of the action was still below that overnight low. So as long as that remained the case, the trade still had a chance. But if we started gaining acceptance back above that level and breaking above these candles here, then I would fully expected that trade to have been stopped out. However, as I say, as you can see, the next candle had a really impulsive, strong push down, and actually hit our full target within 1, 2, 3, 4 minutes. So now, as I say, with this sort of trade, what you can do as well is you can risk manage a trade by scale out of the position to pay for a stop and leave it for a higher target. Now, because the reason you can do that is because you've seen the signal on the hourly time frame as well. By creating a trade with a tight stop and making it risk free, you can then leave your target for the longer target of the target on the higher time frame, and make much better R to R, risk to reward, and make more money on your trades. And as you can see, this actually, although it had some retracements, it actually did end up putting in a very, very strong down move. And I actually think the target for the hourly candle, if you bear with me 1 second. Right, so yeah, I've just checked, and the target for the hourly setup was down here at 935. So you would have been able to get in there, and as you can see, with a tight stop, you've got more than 4-to-1 risk to reward ratio for tying in that confluence between the lower time frame and the higher time frame. Now, as I say, these trades don't always set up like that. You don't always want to just be looking for these ones for the perfect setup where they tie in exactly. But when you do see them and they do tie in exactly, risk manage your trades. Make sure you get them risk free, because you're using very tight stops. But you can leave runners to go for those higher targets and make some really good risk to reward trades. So this was a trade on Dow. Like I said, there was lots of opportunities this week, some really good trading. So hopefully that continues going on into the rest of the year, and we can do some more of these great videos to show you exactly what we're looking at in the markets. So I hope you found that useful, guys. I'll put a link to our Academy course where you can learn all about these setups in the box below, and I look forward to speaking to you again soon. Cheers, guys.